What's up, you guys? It's Graham here. So it's official. If you have any amount of money in the markets whatsoever, you're going to want to hear what just happened. In a very surprising turn of events, Trump just confirmed that Jerome Powell will soon be replaced as the head of the Federal Reserve, and the person who he appointed is not who the markets were expecting. In fact, immediately after the announcement, stocks started selling off. Gold and silver saw their biggest drop ever in history. And now the idea of easy money is completely disappearing because Trump's new leadership completely changed the rules of the game overnight. That's why we need to talk about what just happened, why we started to see nearly everything sell off, how you could best protect yourself as an investor, and then most importantly, how you could use this new information to make money. Because believe it or not, chaos like this sometimes has the best opportunities, but only if you know where to look. Although before we start, as usual, if you appreciate the last-minute breaking news videos like this, it would mean the world to me if you hit the like button or subscribed if you haven't done that already. Yes, I know it sounds dumb. I think it's dumb too, but it does help out the algorithm tremendously, and as a thank you for doing that, here's a picture of a turtle. So thank you so much, and also a big thank you to Rocket Money for sponsoring this video, but more on that later. Alright, so in terms of where to start, all of this begins with the one person the markets fear the most, Jim Cramer. No, just kidding. It's the new head of the Federal Reserve, Kevin Warsh. Why? Well, Kevin Warsh served as the Fed governor from 2006 to 2011 during the Great Financial Crisis, while the Fed was creating government bailouts, market backstops, and essentially trying to keep the entire financial system from falling apart. However, critics say that back in 2008, Kevin Warsh was worried that stimulus would be too much. He wanted to keep interest rates higher for longer, and he warned about the chance of runaway inflation back in 2010, even though for the decade that followed, inflation remained historically low. From there, in 2011, despite Kevin Warsh saying that stimulus wasn't needed, the Federal Reserve announced an additional $600 billion injection into the economy to help the housing market. But Kevin Warsh was a very fierce opponent, calling the benefits small and fleeting and the risks potentially large. Although once he realized he couldn't stop the money printer, in 2011 he resigned, thereby cementing his reputation as someone who would rather see falling prices and slower growth than risk devaluing our currency. Like, even in 2022, Kevin Warsh said that the Fed waited too long to raise interest rates. He claimed the Fed lost credibility by overstimulating post-COVID. He believed quantitative easing inflates asset bubbles and worsens inequality, and he wanted a smaller balance sheet with more focus on stability. Or basically, Kevin Warsh's entire economic philosophy is centered around higher interest rates, slower growth, and a stronger dollar, which is the exact opposite of what the markets were expecting to see throughout 2026, leading to a rather dramatic sell-off. So what happened? To be honest, all of this has to do with what's called the Trump effect. The thing is, as of today, the markets are unsure of exactly what to expect. Like, for the last year, Trump has repeatedly promised lower interest rates. He's openly criticized Jerome Powell for not cutting interest rates faster and more aggressively. And everybody invested with the mindset that the money printer was going to keep running and running and running until eventually the cost of a Big Mac was $100. But now Kevin Warsh is expected to come in and crash the economy to save the US dollar, print a lot less money, reduce the Fed's balance sheet, and prevent the United States from becoming another statistic in Ray Dalio's New World Order. In fact, just a month before the presidential election, Kevin Warsh was asked what he would do if he became the chair of the Federal Reserve. And he said the policies that are good for asset holders are bad for those living paycheck to paycheck, and that we're basically enriching stockholders at the expense of everyday Americans. From there, when he was asked if the stock market would have to fall, he responded with, if the central bank were forced to focus on the real economy, the financial markets will take care of itself, implying that yes, the markets will fall, but long-term, it'll be for the greater good of society, since the rich won't just keep getting richer. Now, even though this seems like a complete 180 from everything Trump has promised over the last year, the reality is the Kevin Warsh today is a lot different from the Kevin Warsh we saw a few years ago. For instance, Warsh is now pushing for lower rates to spark growth. He recently said that we could lower interest rates a lot, and in doing so, get 30-year fixed-rate mortgages so that they're affordable and get the housing market going again. And in 2026, he sees himself as an ally to the White House. Of course, others claim that he's completely flipped and has just become a sock puppet for the sake of getting the job. But regardless of what ends up happening, the market has spoken. Kevin Warsh's history suggests that there will be no dollar collapse. If the dollar gets stronger, the stock market will get weaker. And with tighter conditions, we could actually start seeing mortgage rates go higher. So what does this mean for the 2026 economy? Well, it really depends on who you ask. For Trump, believe it or not, he actually wants the dollar to lose purchasing power. And even though it sounds completely counterintuitive, to a certain degree, it actually makes sense. Like, think of it this way. When our dollar is strong, other countries need to pay more to buy American goods. Our products become a little bit less competitive. And when our money buys more overseas, it encourages people to shop outside of the country. However, when our dollar becomes weak, it encourages other countries to buy from the United States because we appear cheaper. It pushes stock prices higher, and it makes the government's massive debt easier to deal with over time. All of this suggests that we're about to enter an environment that is completely different from what investors are conditioned to over the last decade. Whether or not Kevin Warsh lowers interest rates is besides the point. What actually matters is that the era of predictable bailouts, constant liquidity, and one-way asset prices is being questioned for the first time in years. So in terms of whether or not Kevin Warsh is expected to follow Trump, lower interest rates and do what he's told, or go rogue and keep interest rates higher for longer, we need to discuss exactly what happens to markets during times like this, what is most likely going to happen next, and then how you could use this information to make money. Because believe it or not, times like this create some of the most unique opportunities to come out ahead, if you know where to look. But really quick, while we're on the topic, when uncertainty is increasing and future returns get harder to predict, tracking your spending and optimizing your finances matters more today than at any other point in history. And in terms of where to get started, I'd highly recommend a platform like our sponsor, Rocket Money. Without exaggeration, I've been using them on a daily basis for years to track net worth, aggregate all of my accounts in one place, optimize my spending, cut back on things I don't need, and just make sure that nothing falls through the cracks. Like just the other day, I found out that an old subscription renewed and the new price was 50% higher than before. The truth is, I never would have recognized that if Rocket Money didn't send me out an email alert to let me know. On top of that, they can also help you lower bills because Rocket Money will automatically scan your expenses to find you savings. With just a couple taps, Rocket Money can help negotiate bills on your behalf, from phone to cable to internet and more. Just let the app's negotiators go to work for you to try to get you the best rate. This is why Rocket Money has helped save its customers up to $740 a year when you use all of the app's premium features. And they've also helped customers save over $880 million in canceled subscriptions. So if you'd like to take control of your finances today, just head to rocketmoney.com/Graham to get started for free and unlock even more features with premium. Or you could also use the link down below in the description. Trust me when I say this, it's genuinely worth it. It's one of the few apps that I refuse to ever get rid of. It is just down below in the description. Like I said, you could get started for free. Thank you so much, and now let's get back to the video. All right, now, in terms of what's expected to happen next and how you could use these next few months as a massive advantage, it's crucial that you understand the stock market. The reality is, markets don't usually fall or react because one thing happens. Instead, they reprice due to broader expectations of the future. And the one thing the market hates more than anything else is uncertainty. Like when markets can't reasonably predict the future, they fall to be able to compensate investors for the additional risk. And that's exactly what's beginning to happen. A new Fed chair nomination, like Kevin Warsh, is exactly the kind of event that creates uncertainty. He's previously been the opposite of exactly what the markets have been accustomed to, and it's too early to tell whether or not he's just going to listen to Trump. On top of that, it's also important to clarify that when something does happen, the market typically overshoots way too far in one direction before it eventually swings back way further than most people expect. For example, in April 2025, the sell-off was way more dramatic than it should have been. Just like Trump's good time to buy tweet caused way more of a frenzy to get back into the market. But let's normalize things for a moment. Every single year, without fail, the stock market drops. Like, take a look at this. Even in years where the market finished higher, we saw 10 to sometimes 20% declines. In addition to that, Charlie Munger famously said that if you can't handle these types of swings, you deserve the mediocre results that you're gonna get. Now, to take this a step further, since 1980, the average S&P 500 intra-year drawdown is 14.1%, and in 34 of those 45 years, the S&P 500 has finished with positive returns. Separate from that, actually closing the year down is surprisingly uncommon throughout history. Like if you go all the way back to 1950, you could see that only 2 years closed the year down more than 25%, and only 3 years closed the year down between 15 to 25%. The rest of the time barely lost anything, or more commonly, ended up making you a lot of money. Plus, if you want to feel better about investing during a time like this, the average time to recovery from a 5 to 10% drawdown is 3 months, and the average time to recovery from a 10 to 20% correction is 8 months. But fine, let's say things get really bad. We end up seeing a market drop at the same time as a recession and things get really bad. Even in that scenario, the stock market recovered on average within 1 to 2 years. Because of that, investors are much better off just adding to their portfolio and holding than selling and trying to buy back cheaper. And if that doesn't sound crazy enough, here's one more piece of data that'll just solidify it. Historically, when January is up between 0 to 2%, the next 11 months have been lower only once in history. And usually, when January is green, the rest of the year ends up an average of 16.9% higher. It's also not unusual for February to be one of the worst months of the year for stocks, with being on average negative since the 1950s. That's why, in terms of the best way to make money going forward, we need to talk about the 2026 strategy. So far, studies show that despite market volatility, risks, and uncertainty, you have a 62% chance of being positive after a month, a 75% chance of being profitable after a year, 89% after 5 years, 95% after 10 years, and 99.8% after 15 years. Or basically put another way, if I told you you have a 99.8% chance of making money 15 years from now, dumping everything you have into the markets today, would you do it? If the answer to that is yes, well, that's a pretty good reason to keep investing your money, even if the short term seems shaky or even goes down in price. All I'm getting at is this: the tried and true method of investing in stocks that has worked throughout history so far is simply a buy and hold strategy consistently for 20 to 30 years. That's it. Seriously, the stock market and cryptocurrency are the only markets I've ever seen where the price falls and people just lose their minds. Like, from my perspective, unless you're planning to cash out and use the money in the next few months, what happens between now and a few years from now really makes no difference at all. Like, you wouldn't go and panic if the price of an iPhone gets reduced down to $500. Even if you already own the iPhone, what you might do is go out and buy a new iPhone. You wouldn't go and panic and be like, oh my god, I have to sell my current iPhone because now they're trading at $500. That doesn't happen. That's why I think if you own stocks, Bitcoin, gold, who cares if the price falls 30 to 50% if you're not planning to use the money anyway? Instead, you should just see it as it's a Black Friday sale. I'm able to get everything at a discount now, and a few months ago, I would have loved to have bought at these prices. But now that the price is actually trading lower, oh no, I'm too scared, I can't do it. Don't think that way. That's why I've never understood why some people are so fearful of the market falling, or they do everything they can to prevent losing money. It's a part of investing. As long as you're not buying into something like Fartcoin, history has shown us that time and time again, everything works out long term for those that are patient. So in terms of what I think and my own plan going forward, here's what you came for. First, let me just say this. In my almost 10 years of making YouTube videos about the stock market, I've noticed a repeatable pattern. It starts off when people are enamored at the prospect of making money, and so they FOMO into it because they want to make as much money as possible, and pretty soon, prices become completely disconnected from the fundamentals. And then something happens and the opposite occurs, where all of a sudden, fear drives the market more than logic. Don't let this be you, because no one could predict the future, and the only way you guarantee not being left behind is just to stay the course. Not to mention, price drops like this should be seen as an opportunity. Like, in a weird way, the Great Recession allowed people access to buy incredible assets that they never would have been able to otherwise. It's how I was able to buy a literal house in California for $70,000. I never would have been able to have done that otherwise. The same occurred in 2020. I was buying into the S&P 500 index funds on YouTube videos when it was trading at 2,300. Then again, in 2022, when the markets crashed to 3,600, I was buying. I was buying Bitcoin when it was 16,000. I was buying it when it was 30,000, 50,000, 110,000. And again, at $75,000. To me, as long as I don't need the money in the next few years, I keep buying, because whatever it is, doesn't matter if I don't need the money right now. Beyond that though, in terms of Kevin Warsh, my personal take is that there is no way he's not going to lower interest rates and basically do what Trump tells him to do, and I think the market's overreacting. Like, be real for a second. Trump could appoint anyone he wants as the head of the Federal Reserve. He wanted to get rid and fire Jerome Powell for not lowering interest rates as fast as he would have liked. You don't think he'd actually select someone who would do the opposite of what Trump wants him to do, right? Now, I'm not saying Kevin Warsh is going to blindly follow orders on a minute's notice, But I'm also saying that most likely they are aligned. They have the same objectives and the same goals. Otherwise, Trump wouldn't have appointed him. But do keep in mind, though, as a counter-argument to that, in 2007, Kevin Warsh did say that everything was fine. Credit risks are non-existent. Banks are doing great. 1 year before everything came crashing down. So long story short, anything can happen, but one thing is certain. Long term, if you stay the course, if you keep buying, you will be fine. 20 years from now, none of this is going to matter, and it'll help you, no matter what, to hit the like button and subscribe if you haven't done that already. So with that said, thank you so much for watching. Make sure, of course, to check out Rocket Money down below in the description because, number one, you got to get your finances in order. Rocket Money can help you do that. Enjoy. Thank you so much, and until next time.